Invest Africa, proudly brought to you by KPMG.
Welcome back to Invest Africa. Remember, we value your suggestions and feedback, so please send us an email to investafrica@abn360.com or interact with us on Twitter. That's at CNBC Africa, #InvestAfrica, or follow me at Nozipho Mbanjwa. Still with me, I have my guest Martyn Davies, the CEO at Frontier Advisory, Craven, the head of corporate finance at Export Trading Group, and Kwame Owino, the CEO of the Institute of Economic Affairs in Nairobi. Gentlemen, welcome back. We left the conversation on the point of industrialization. Let me come to you first, Sean. It seems as if African governments are waking up to the idea of development for the sake of development. But is this translating in policy? Are we seeing the right policy decisions to drive industrialization?
The policy decisions, I think, are coming, but I mean, as all governments across the globe, perhaps at a slower pace than one would hope. One would think that perhaps the focus in terms of industrialization goes to some of the easier sectors like agriculture, where one can perhaps get some easier gains versus, you know, the larger, if I can call it, sectors like mining and energy. So one must be realistic in terms of, you know, it's not going to happen in a short span of time, but perhaps focus on those industries where one can gain quicker wins in a shorter time.
Martyn, would you agree that we're not looking at the quick win sectors, particularly leveraging off the opportunities that could come from agriculture?
You know, the continent, despite talk of industrialization opportunities, looking even at in the last 2 decades, 3 decades or so, the Asian experience in terms of really creating sustainable economies beyond resources.
Yeah.
Agriculture is probably the exception, but solid commodities, oil, effectively you're investing in an asset with diminishing returns. That's effectively it, and that's not a sustainable business model. So if you're not adding value to economies through innovation, through manufacturing, ultimately, you know, it's not a sustainable economic sort of model here. So I think clearly there's a continuing obsession. We see it around extractive industries in our continent, unfortunately.
Right.
I think there's far more validity perhaps in focusing on sort of agribusiness, softer commodities, and perhaps, you know, harder commodities, but oil's obviously a bit more sexy, and natural gas in many countries' cases. But I really do think which countries for me are thinking about this industrialization thing. Regions certainly aren't, I would argue. 2 countries stand out who could emerge. Again, this is a very sort of maybe optimistic and maybe too much foresight sort of comment here, but the 2 countries for me, mainland African economies, i.e. Mauritius aside, South Africa, we're different, aside, is Ethiopia and Kenya. And those are the 2 countries, Ethiopia especially the light industrial, low-end manufacturing level. You've got to start somewhere. Who are making really progressive policy strides, but beyond policy implementation, and differentiating themselves away from commodities and actually doing something ultimately of substance.
Kwame, the spotlight is back on you, back in Kenya, but before you respond maybe to some of the comments that have been made here in Johannesburg, I'd like you to also touch a bit on the infrastructure deficit and whether we're seeing the right kind of projects dominating government budgets for us to overcome this deficit.
Well, let's start with, yes, I mean, the infrastructure deficit on the continent, but talking about whether it's the East or even the West, is huge. I think sometimes one just has to fly over or look at satellite pictures and you can tell whether it's energy, whether it's rail, roads and all that. It's definitely a big one. And there's such a serious backlog with huge population growth. So it's clear, starting with the fact that most of these African economies are small, so the ability to actually, even when the will is there to actually roll out infrastructure, it's not possible because the money is just not there. So again, I think this is one other area in which definitely some money is required, but of course that requires sound macroeconomic policy so that government could receive some money or work with some partnerships of private sector to actually develop this. So definitely, I think
but Kwame, let me jump in and interject there for 2 seconds. You know, from the OAU 50 years ago to the African Union and all these other summits and that we often hear about on the continent, it seems as if there's always been this political will to push for cross-border infrastructure projects. Why are we not seeing this actually translating into action?
As I said, first, I mean, the first thing is just that often the money wasn't there, and then secondly, not all African nations were necessarily as friendly to each other to actually invest jointly on some of these projects, because they require more than, cross-country investments. So some of it is just that I think the opportunities were there, but they were not grabbed in time. And so we find ourselves with a huge infrastructure deficit. So it's just definitely that there's some slothfulness. I mean, and opportunities that should have been grabbed were not. When there was the opportunity to do that, and perhaps when money was financial resources were available at a cheap rate. So I think that didn't happen, reflecting internal policies of African countries. A few countries did do that, I think.
Right. Oftentimes the blame is put on the door of private sector, and it says that the government is really active and the private sector is taking on a rather passive role in driving this. Jean, do you agree with that?
Yes, I do. I think in terms of infrastructure, which obviously has been highlighted as one of the major barriers, I think there's ample money out there looking for places to invest. I mean, there's a lot of infrastructural funds that have sprung up recently, Pembani, Remgro, to name but one. And I think a suggestion or a thought might be for these local governments to perhaps look at privatizing some of this key infrastructure, privatizing these ports. We've seen what Grenada has done with the Maputo port, the effectiveness has picked up. There's a lot of railroad potentials where one can look at privatization, and I think give the private sector a chance by privatizing some of the key infrastructure, rather than letting us on our own steam trying to deal with the mishaps in the infrastructure.
I see you nodding.
Entirely correct. Privatization of infrastructure allow private sector to play in infrastructure, even in South Africa. Private sector will always pursue the commercial opportunity if they're allowed to. And without integration, sort of my headline here is, I'm deeply concerned about the future of small economies in Africa, which are seemingly unviable economies without more effective integration with neighboring economies at a regional basis. There's an imperative here, and our politicians need to get to the program.
And I wanted to jump right on that. I mean, how do we overcome the structural shortcomings, especially when you look at the size of African economies and what they can do with that size? Clearly, it seems as if the obvious answer is that you break down borders, you increase market size, and thereby you drive manufacturing capacity. But it's not happening. Again, I ask, how do we change the structure of the African market structure?
In the Asian case, if you refer to a structural sort of impediment, for me it's a mindset, it's a cultural thing.
Right.
How does the state, Asia style, become the entrepreneur? That's what it must think in more commercial sense. Ultimately, peoples in countries do not succeed or develop because of regional competitiveness. They succeed because of country competitiveness. Countries to differentiate themselves in our region. And again, if you're a landlocked country like Botswana or Rwanda, Burundi, Uganda, it's even more challenging. But we need to, if we care through the AU, as you mentioned, if we care about the future of small countries in Africa, this imperative of privatization of infrastructure, harmonization of policy, getting goods, people, capital flowing across borders is absolutely imperative. And the arguments about this is neoliberal economics, I'm afraid, is rewinding 20 years.
Rewinding 20 years, let's move from country differentials and maybe look at small and medium-sized businesses. Kwame, is there room for small corporations to play in intra-Africa trade?
I think it's the only way. Large corporations, in my view, in some cases, are just too big for these regions. I mean, look at East Africa, for instance. I mean, everybody praises it as a leader in Africa in terms of integration, but the total GDP of the 5 East African countries is just 85 billion. That's big by these continent standards, but obviously not, because it's even a fraction of what the whole of South Africa is. So obviously, these are really small companies. And my view is that some of the most creative businesses tend to be the medium-sized businesses. So I'm not necessarily talking about a small 2-person farm, but I'm talking about a farm that internationally may not necessarily be the largest. It's not necessarily a Coke or one of the bigger ones, but one that actually knows how to focus, will provide, will have a country focus, will come here and make some investments, of course train a few people and get to export in the region and use that as a platform to expand its markets. So definitely small and medium, I mean especially the medium-sized businesses that can operate internationally would be part of that strategy, and attracting them is very, very difficult because they tend to be very choosy, but at the same time they don't have too much money to actually spend on jumping over bureaucratic hurdles. Right. So what that means is that the more open a country is, And the more open a region is, the less hassles you provide to businesses of this kind, the higher the chances that you'll have them operate within.
Sounds as if it's the ease of doing business all over again. We've got about 2 minutes left, so I want to throw the final question to you, gentlemen, and perhaps get your thoughts on that. And I want to look at the opportunities that this entire discussion that we've had throws up, especially when one picks up an article from DHL saying that logistics companies should be in Africa right now, plugging in these gaps. We can't be having these conversations without it being very clear that this is also an opportunity for others.
I think there's, we've focused on the negative points, but money is definitely flowing to Africa. There's a lot of business taking the front foot here. If you just look at flights departing from OR Tambo on a daily basis up north, there's a lot of feet moving around. So things are happening. Private sector, I think, are taking the initiative, and we're dealing with the shortcomings of infrastructure, and it's. I think one shouldn't use it as an excuse, but perhaps as an opportunity, and see, how can we still try and remain competitive, in a global market with dealing, and certainly, a company like ours, we've been based in 30 countries across the globe, and quite involved in intra trade, and we're getting it right, and so a lot of our peers out there. So, and we definitely invite other international companies come and join. There's the opportunities there, and just get in and get stuck.
Martyn, I'm going to allow you to respond to that, but also if you may just touch on whether South African companies have first mover advantage onto the continent.
On exactly that point, supporting it in the context of dysfunctional states. The more dysfunctional the state, the greater the opportunity for private sector. In every sector, from logistics, think education, think power, think security, whatever it may be. Where the state cannot provide, the private sector will on a commercial basis. I think secondly, in terms of looking forward to the continent here, is a first move advantage. Who's winning in Africa? Is it the Chinese? Is it the BRICS? Is it the traditional players? I'd argue it's the South Africans. South African companies, mostly JSE listed, in key sectors, who are enjoying first move advantage, capturing consumers or end users, consolidating and ultimately winning by measuring shareholder value. This goes from retail to security to retail banking to infrastructure to an extent to logistics you mentioned. South African firms is a country often used the gateway for Africa? Well, it's not. Countries aren't gateways, always companies or cities or capital markets, never countries unless you're a city-state. So we have the home field advantage, if you will, and this is our economic neighborhood after all.